protecting Main Street from Wall Street. It's Chris Hoffman with Money Unleashed.
How much money do you put into your checking account from work on a month-to-month basis? It has a high probability that with your investable assets, we can replace that paycheck.
It's time to put you back in control of your money.
You've worked for 35 years. It's time for you to not stress. It's time for you to enjoy and live the retirement you want to live.
It's Money Unleashed with Chris Hoffman.
Welcome into the Money Unleashed podcast with Chris Hoffman of the Hoffman Financial Group. New episodes come your way on Mondays and Fridays, so make sure you're subscribed wherever you get your podcasts. Chris, I'd say we have plenty to discuss on today's show, but before we dive into all of it, how is everything going in your world?
It's going great. Happy to be back. We got a lot to talk about. A lot of movements in the markets, a lot of political movement, too. With the tariff announcement by Trump, looks like everything went into place late last week, and we'll see. I mean, he was pretty clear about his objectives of it. He wants to bring the manufacturing base back to the U.S. He's got companies saying they will commit billions of dollars to building it in the U.S. That could be very positive. And his language about wanting to create kind of an equal playing field on tariffs, if they're charging us, we should charge them. And it appears, at least his language, says they're not even reciprocal. So he still says that they are going to be charging us more on their VAT tax and tariffs and all that stuff, then we're going to be charging them. So we'll see how it lands. Hopefully it will boost our revenue as a country, and hopefully it will add jobs on the manufacturing base and give us some independence from foreign games, let's call it. So That's the hope anyway.
So an eventful week for the economy, to say the least. And as anyone who's been listening to this show can attest, and we have covered tariffs a time or three, Wednesday marked a little thing that Trump called Liberation Day, though. He rolled out the reciprocal tariffs, which we can dive into in a moment, but taxes on imported goods from a wide range of countries, all aimed to penalize them for trade barriers and generate revenue for the United States, which puts those funds towards tax cuts, reducing the deficit, and energizing domestic manufacturing. So we're hearing all kinds of things, Chris. We're seeing all kinds of things. We're reading all kinds of things about all of this. So let me just hand it back over to you. What should we be taking from all of this and weeks in which these kinds of things are in the forefront?
Yeah, so he's kind of dancing on the head of a pin, I believe. And this is just a personal thought, but is it the art of the deal? Is he pressing them to come to the table with a longer-term plan of creating an equal playing field across the globe? If that happens, he's put the art of the deal together, and that would help us tremendously. If he just levels these tariffs and expects us to be able to build, let's use the automobile industry as an example. If he thinks they're going to be able to open up manufacturing and assembly plants overnight in the U.S., just because they're committing billions of dollars doesn't mean car prices aren't going to go up substantially until those facilities are built and start rolling off of our assembly lines or the parts come from our manufacturing base. So, I mean, that's what he does. Everybody knows he's businessman first, politician second. But if he's able to pull it off, and maybe he laid a large hammer on this topic to get everybody's attention, and if they come back to the table and they're willing to play nice, can he work it out to extend this over multiple years? If so, I think he wins. If he levels this hammer and implements it immediately, we're going to see I don't know what percentage, but if you got a 25% tariff on automobiles coming into the U.S., it's going to hit us, and there's going to be some sticker price shock. So that's what we're facing as your advisory team. That's what we're watching, obviously, to see how that impacts purchasing and inflation and the ability for us to work with international countries and get the best products and services imported in. And yes, we want to export out, and we don't want to have imbalanced trade tariffs. That's the whole purpose of this. So if we're able to pull that off, could be a big win for us.
Now, Trump said that tariffs will not be fully reciprocal, according to the address on Wednesday. But even that halved figure could make an impact, most certainly. And the idea of all of this, of course, is to usher in what the administration is hoping will be a golden age of America, or at least a new one, to see more jobs here domestically and increase production and ushering in more prosperity, which, if I remember correctly from the campaign trail, was something that was talked about, if not promised, by, well, really both candidates, but certainly the administration coming in. They want to be able to deliver on those promises.
Yeah, so here's where I get confused. And I'm sorry that I'm confused. I'm supposed to be the expert on this show. But here's where I'm confused. Are we going back to the Industrial Revolutionary days? Is that what he wants this country to become? Because we've got a different side to it right now. And the different side is technology, AI, Mag 7, Internet 3.0, 4.0, et cetera, cybersecurity. And we've been very aggressive as a country at kind of leading the technology boom. And that kind of points us back toward brick and mortar and frontline workers. And frontline workers aren't necessarily paid the highest wages. Arguably, they should be. I'm not going to argue that point. But we've got two now kind of diverging paths as a country potentially. Now, if we're able to do both and fund both, and I believe there's a possibility that's the case, that would be great. But he's not talking about the technological side, maybe because it's been overdeveloped, but I don't want to lose that grip on the economy. So it's a balance between manufacturing and providing goods versus services. We have definitely become a service economy where we service people. We don't build things and provide product. So I do agree that we need more of that. Melding that into our economy, it's going to be a tricky road. So we'll see how it goes. But enough on tariffs. We've beaten that up, and time to move on and talk about the stock market and investments and financial planning, I think.
Yeah, and we certainly have a lot to unpack. And as I do like to say, we won't be able to get to all of it here on the show. We certainly won't be able to parse through every line of the chart that the president was holding up in the Rose Garden on Wednesday either. But I know you've discussed this quite a bit. Markets do not like uncertainty. I will say this, if nothing else, this may be for now uncertain, but in the future, there could be some, and I'll get to this a little bit later in the show as well, some long-term ramifications that could be more of the positive variety. We're going to have to wait and see. Yep. We're going to have to ride it out. But for now, as you do look at the stock market, in light of the economic uncertainty, what do you feel like we should really be focused on right now?
So I think that what you just mentioned is the relevant topic. It's if we want this to work, we're going to have to be patient with it, I believe. There's going to be short-term volatility in the stock market. The stock market doesn't like uncertainty. This raises uncertainty. There may be shifting of jobs. Obviously, he's going after government positions already and some other items, and he's trying to build it back with manufacturing. All of that may take several years. So what we're conscious of right now as a financial advisory team is, how do we not have our clients caught up in this volatility, specifically downward market trends, and kind of play it a little bit more close to the vest versus the massive growth trajectory, and I'm talking about the stock market only, that we've seen over the past 5, 10, 14 plus years. So I agree. This all over time could provide a very balanced world economy and put us at the forefront of it and bring growth to our GDP and raise the jobs, lower unemployment, et cetera, et cetera, et cetera. But it's going to take time. You can't just snap your fingers and it appear. So there might be a give-get here. We might be giving up some short-term growth for some long-term stability. Let me also mention that we've got a massive amount of debt as a country. That has been our kind of model for how to prop up our economy. We have spent. The government has spent. They have printed currency digitally in massive amounts and flooded the market with it. So that eventually needs to be addressed, and I think this economic strategy that Trump and his administration is deploying may just do it, but we're going to need to be very active in managing our portfolios, very active in managing our financial plans, and stay current to the exposure that these tariffs and these economic policies bring. That would be my point. 5 years from now, we may be golden, but for the next 5, I'm watching every piece of the metrics and making sure that we don't get caught in a trap downward.
So you just gave us some great information, some great context to the events that are going on right now. That's the education part of our show, but we're also here to help you take the appropriate steps and the necessary actions. So right now, Chris, if somebody's sitting there wondering how this could affect them, it feels like picking up the phone and making a call to a certain financial group that we know and love might be able to help them out with some clarity for uncertain times.
Yeah, so I would say if anybody's listening right now and they're wondering, right? You never want to wonder and just hope that everything's going to be fine. If you don't know, if you haven't had the assessment, if you don't know the risk profile in your financial life, and I'm not just talking about your stock portfolio's risk profile, I'm talking about everything. I'm talking about Social Security, pensions, stocks, bonds, insurance products. If you don't know where you're at risk, you need to, especially now. So I would invite you to do kind of a risk analysis with us, and that's through the Portfolio X-ray. It'll give us some really good, solid risk information in addition to growth achievements versus targets and how you're being taxed and fees and those types of things. But if you want a risk assessment, call us at 404-341-6767 or go online to unleashyourmoney.com. Click that Portfolio X-ray button. That would be a great place to start. And it may calm you down if you're concerned about what the future is going to hold.
Hoffman Financial Group is here to help you every step of the way along your financial journey, through the highs and the lows, through the uncertain times as well. They'll help you identify the right strategies for growth and protection. And it all starts with that Portfolio X-ray, which there's no cost to get yours today. 404-341-6767 is our phone number, 404-341-6767, or online at unleashyourmoney.com. Chris Hoffman is an investment advisor representative of Brookstone Wealth Advisors, LLC, a registered investment advisor and affiliate of Brookstone Capital Management, LLC. BWA and Hoffman Financial Group are affiliated under common ownership. Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interest of our clients and to make full disclosures of any conflicts of interest. Please refer to our firm brochure, the ADV 2A, page 4, for additional information. The Hoffman Financial Group and WSB are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with a professional specializing in the field of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Any client experiences discussed during the show are unique to that client. They are not meant to imply or suggest you will experience the same results. Past performance is not a guarantee of future results. Investments will fluctuate and when redeemed may be worth more or less than when originally invested. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone. Index or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract. Please refer to our firm brochure, the ADV 2A, item 4, for additional information. Hoffman Financial Group is not affiliated with or endorsed by the Social Security Administration or any other government agency. Insurance licensed in Georgia, number 163546.